The Aussie versus US dollar didn't jump on the lower dollar bandwagon for that currency pair in trading today. In fact, the Aussie versus US dollar pair is lower on the day. I'll talk about that in this video and also talk about the technicals that are driving this currency pair. So let's get started. There's a lot of things that could impact this currency pair, including things like tariffs, U.S. versus China trade issues, and slower global growth potentially as well. That may have an impact on the Australian economy, and in turn the Aussie versus US dollar. And so when the news came out and the price opened lower, we did move lower, but we did find support technically on this hourly chart right against the 100-hour moving average. That's a blue line in the chart. The price rebounded to the upside, and we did move above this swing area for which we broke on Friday, broke to the upside on Friday. The swing area is defined by a number of different swing highs coming through here. We broke above that level, and what was key on Friday was that the low price right here held support and pushed to the upside. Well, not to put a damper on that idea, the price did open below that high of the area, or right near it, and then moved to the downside, bounced off of that level, and we moved above the high of the swing area here, but then that failed as well, and has pushed the price lower still. That move to the downside has now moved back below the 100-hour moving average and back below the 38.2% retracement of the move down from the either December or the November high, going back in time over here. That level comes in at 0.62907. We've also, as you see, fell on below the 100-hour moving average. That's more bearish, and increases this level's importance now going forward. As long as the price can remain below those levels, then the bias remains more to the downside. On the downside, I have outlined some other swing levels in play, including this level at 0.6274. Go below that level, and we'll look toward this level right here at 0.62644. And then we get toward the 200-hour moving average, which is probably a bigger technical level to get to and through if the sellers are to take more control. Recall going back to this day right here, the market based near that level and pushed to the upside, not testing the level since that time. So that's 200-hour moving average comes in at 0.62513. Those would be levels that we target on the downside. And if we broke, it would increase the bearish bias. So there you have it. Sellers are trying to make a play or keep the bias going in its direction after the failed break on Friday and the selling and trading here today. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.